What's up, investors? Justin here. So today I will be talking about a new EV stock that is slated to go public sometime in the first quarter of 2021. And I want to talk about this EV stock in particular because the stock price has gone up quite a bit since the news of the merger was announced last Wednesday. In fact, since last Wednesday, CIIC stock, which is the shell company that will merge with Arrival, is currently up 135%. And of course, by the time I publish this video, the stock will probably have jumped even more than that. But before I recommend jumping on the EV hype train and buying shares of Arrival stock, I think there are a few red flags that you should know about before you buy. So in this video, I will go over those red flags, and then I will give you my opinion for what I think the future holds for Arrival stock. But first, if you are new here, please consider hitting that red subscribe button. I upload multiple videos a week on the stock market and investing, and my goal is to help you make more money. Also, I'm trying to get this channel to 5,000 subs by the end of the year, and every little bit helps. So hit that subscribe button, and let's get into the video. Now, before I specifically talk about Arrival stock, I think it is important to remind ourselves just how many EV stocks are currently out there. Right now, there are easily over 24 EV stocks that are publicly traded, and that number will most likely keep growing as newcomers like Arrival keep popping up. But to me, it is not surprising that this is happening. Whenever there is a new disruptive technology with huge growth potential, businesses will pop up to try and take advantage. We saw it in 2000 when the internet came along, and we saw it just a couple of years ago when Bitcoin became popular. And while there were many different companies that tried to take advantage of these disruptive technologies, not all of them have withstood the test of time. So when it comes to the electric revolution we have happening right now, I think it is very naive to think that every EV company that pops up is going to be around for many years to come. The reality is that not all of these EV startups will last. And honestly, most of them will probably fail sooner rather than later. And it is also likely that a small number of these EV companies are outright scams. We saw this with Nikola just a couple of months ago, and I can guarantee you that there will be others who try and do the same. Now, I am not saying that Arrival is a fraud at this point, but I think it is important to be skeptical of every EV startup. So with that being said, let's take a closer look at Arrival stock and give you some basic background information on the company. Arrival is a UK-based startup that plans on making electric vans and buses for the commercial markets, with plans for vehicle production to start late next year. Arrival will plan on manufacturing their electric bus first, and then will move on to their electric van sometime in 2022. Now, from everything I have read, this is a company that has pretty ambitious goals for their products, and they claim to have quite a bit of proprietary technology to help their products be very competitive. Now, proprietary tech is very important for companies, and in this case, it is even more important for a stock like Arrival. But for me, the most important factor for deciding whether or not a new company will be successful comes down to leadership. And that is one thing that is missing from a lot of the articles that I read. Now, in my opinion, leadership is vitally important because a plan is only as good as a person who executes it. I personally would take an average business plan with someone that has successfully ran multiple other businesses than a foolproof plan with someone that has no business experience. So keep that in mind, and we will come back to that at the end of the video. But first, let's run through the details of Arrival's business plan. Arrival plans to use what's referred to as microfactories to get their EVs to market faster than their competitors. These microfactories will be anywhere from 100,000 square feet to 200,000 square feet and will cost roughly $50 million each, which is a lot cheaper than traditional factories. And it is through this microfactory approach that Arrival estimates that they will be able to generate $1 billion in revenue as early as 2022. So this microfactory approach is pivotal to Arrival's plans for generating and growing revenue as quickly as possible. And it appears that Arrival is making good progress towards their goal, as they have already started building their first 2 microfactories, one of which will be located in England and the second will be located in South Carolina. So that is a really good sign. Now, in terms of batteries, Arrival's vans and buses will use cylindrical battery cells from LG Chem and will assemble the battery packs in-house just like Tesla does. Also, the cylindrical battery cells from LG are the same battery cells that Tesla currently uses. So I think in terms of battery performance, Arrival's EVs should work very well. Now, in my opinion, the pivotal part of Arrival's plan hinges on their use of a proprietary thermoplastic composite that they will be using for their body panels. And this is the most important part part for Arrival stock because using this proprietary material is what will allow them to use microfactories instead of regular-sized factories. The thermoplastic composite body panels do not need to be painted, and they can be assembled using adhesives that are currently used in the aerospace industry. Also, instead of using stamped metal for the chassis, Arrival will be using extruded aluminum, which they say will make assembly a lot easier. Now, this all sounds great, but it does sound like Arrival is using some materials and methods that might not be as structurally sound as other manufacturing methods. And keep in mind that these are pretty big vehicles. So Arrival could face some headwinds if it turns out that their vans and buses are not as safe as other vehicles. But regardless of Arrival's untested manufacturing methods, many big companies and big investors have jumped aboard. Arrival has already secured multi-million-dollar investments from strategic partners such as Hyundai, Kia, UPS, and BlackRock, with BlackRock investing $118 million just over the past month alone. So there are definitely some big names that are investing in Arrival. Also, UPS has agreed to purchase up to 10,000 delivery vans from Arrival by 2024 and has the additional option to purchase 10,000 more after that. Also, as part of the deal, UPS has also invested an undisclosed amount into Arrival. So all of this is great news for Arrival as they already have some orders and they have some pretty big investors on board. But here's the deal, guys. While right now I am cautiously optimistic on Arrival stock, my initial perception of Arrival was not as positive. And that is because they seem to say all the right words in their promotional material, which many people would consider to be a positive sign. But for me, when I read words like vertically integrated and proprietary technology, I couldn't help but think of Nikola, who not so long ago was the darling of the EV space. But it turns out they had lied to investors and had just told investors what they wanted to hear. Also, Nikola built working prototypes and even had very legitimate companies as investors. So I am not in any way, shape, or form calling Arrival a scam, but I really am curious to know if the things they are saying are true or if they are simply telling us what we want to hear. And honestly, the truth is probably somewhere in between. But the two big risk factors I see with Arrival stock stem from their technology and their leadership, both of which are big unknowns. Arrival CEO Denis Sverdlov was the co-founder of a Russian company called Yota, which was established in 2006. Now, Denis exited the company in 2012 and made a small fortune from the sale of his shares. But later on in 2019, Yota filed for bankruptcy. So while Denis was able to walk away with a large sum of money, his company did ultimately fail, which in my opinion is not a good sign. Now, it might not have been his fault, but there is a possibility that he saw the writing on the wall and left before it all came crashing down. We just don't know. Also, while I think the idea of using microfactories is unique and has its advantages, I think that it could cause some problems later on down the road. In terms of scalability, these microfactories could give Arrival a head start over other EV startups that are attempting to build massive factories. But long term, it does mean managing more locations, which could lead to inconsistencies in build quality and hurt Arrival when they try to ramp up production. Also, like I said earlier, there are things that you cannot manufacture in a microfactory. So it will be interesting to see if there are any safety or durability concerns as Arrival starts to produce more vehicles, at which point Arrival might need to abandon the microfactory plan and commit to building larger, more robust facilities. So as you can see, there are a lot of unanswered questions when it comes to Arrival stock that won't come to light until Arrival starts producing vehicles. And whether or not they will be successful over the long term is very hard to predict right now. But if we focus solely on the stock performance, I think this will be a stock that over the short term is very likely to keep running higher. And as a short-term investment, I think there is money to be made by buying Arrival stock right now. However, once the hype wears off and it is time for Arrival to execute, I think it is safe to say that the share price will probably drop. And that is simply because of all of the unknowns. And also the stock will have probably run up too much and will need to take a breather. So if you were planning on buying Arrival stock, I would highly recommend buying it as soon as possible, with the intention of selling it before it suffers a big drop. And in my opinion, it would probably be best to set a trailing stop loss at around 20 to 30% just to limit your losses. but even that might not save you since big price swings can happen in after hours trading. So essentially what I'm trying to say here is that by all accounts, Arrival seems to have a good business plan, and they are already taking steps towards completing that business plan with the 2 microfactories they are currently building. Therefore, I remain cautiously optimistic on Arrival stock, and I think they have a decent chance of succeeding. But we will just have to wait and see what happens. So if you enjoyed this video, hit that subscribe button and leave a comment below with your opinion on Arrival stock. Are you buying or are you staying away? Let me know below. And with that, thank you for watching, and I will see you in the next one.